Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with the weekly news again. And of course, the only man that brings us the news, Nick Bendel. Welcome, Nick.
Well, thank you for having me. It is great to see you again.
Yes. And because we do this weekly as per the segment name, the weekly news. So,
Hmm.
yes, it's good to see you every week. And how's your past week been, by the way?
It has been enjoyable, productive, exciting, memorable. I had a very good week. I had lunches with two very prominent people in the mortgage broking industry. Well, in fact,
Oh,
sorry, I had one lunch and one dinner. That was very nice.
are you
Uh,
dropping names or?
no, I think you may have noticed that I wasn't dropping names. I
Ooh,
was I was just hinting.
okay.
But but names were not being dropped.
Okay.
And did some met some other people, did some other networking, and uh, completely unrelated, signed on two new mortgage broker clients. For those who don't know, I have a business called Hunter and Scribe, which writes content for mortgage brokers throughout Australia. So it was very nice to sign on two new broker clients.
Fantastic, fantastic. Well, we've been busy this week as well at Leifield with property management, leasing lots,
Mm.
lots of properties getting leased all over the country. So that's been good, and which I think we're going to be talking a little bit about later. And because I did have a sneak peek, I normally don't. I fly by the seat of my pants, but I had a sneak peek at the stories you're going to bring up. But that's by the by. What was I talking about? Oh, yes, my week this past week. It was yeah, interesting developments in the business. We have employed an AI agent.
Mm.
It's which has been very interesting, and we're looking at employing one or two others, and to be able to help our property managers become more efficient and cut down on a lot of admin tasks. So it's interesting to see how AI is coming into the industry and helping us all in business in general, but also in the property management industry, help to look after our clients a bit more and help look after our property managers a bit more as well so that they can get more done.
Have you heard of the well-known thought experiment involving the owner of a paperclip factory?
I do recall a story about this, but you'll need to tell it again.
Well, I will do so. The paperclip factory owner decides to use AI to improve the productivity of his factory. This story is about the potential dangers of AI. By the way, I'm very optimistic. I think it'll all kind of work out and make humanity better. But the point is that AI takes human instructions ultra literally, and even though we think
Mm.
we're being clear, AI will discover the slightest ambiguity. So the owner of the paperclip factory instructs his AI to maximize production in the factory. What could go wrong? And the AI realizes that one of the big impediments to productivity are all the humans in the factory. So he organizes for all of the humans to be killed. And then he realizes that a further impediment to the production of paperclips are all these pesky humans all around the world. So the AI organizes for all the humans to be killed, and then the AI realizes that it could further maximize paperclip productivity by taking over all the planets in the galaxy. And so before long, every single planet in the universe is making paperclips, and literally trillions of paperclips are being made each day for no one, for no purpose.
There you go. Yes, the dangers of AI. Skynet may truly take over the world with the robots and AI, but it's but interesting story. As they say in business, business would be so much easier without all the people involved.
If you come into work one day and you notice more paper clips than usual, it might be time to just switch off the AI.
Yeah, you never know. You never know. But besides AI, we are employing more real people as well. And I guess that's what um, AI will be able to help us do in
Mm.
business is be able to employ more real people to get more work done and so that we're more efficient. So yes, we're literally interviewing for a leasing specialist role that could turn into another portfolio manager down the
Mm.
track as we're growing. So yes, that's what's been happening in our world for the past week.
Oh, fantastic. I'm glad to hear Leifield is going from strength to strength.
Yes, but Nick, I think it's time for the news. What's in the news this week?
Our first story, which I know will make both of us very happy, broker market share climbs to record 77.6%. Mortgage
Wow.
brokers originated 77.6% of all new residential loans in the June 2025 quarter, the highest share on record, according to data from Cotality that was commissioned by the MFAA. Broker market share has risen significantly in the past 2 years. Back in June 2023, it was 67.2%, which was 10.4 percentage points lower. MFAA CEO Anya Panek said Australians have demonstrated a strong preference for brokers over banks. The results are clear. More consumers than ever are benefiting from the choice and competition brokers deliver, and that is a good thing, she said. Owen, why do Australians prefer brokers to banks?
Because they want choice, they want service, and they want a professional who's working for them in their interests, which brokers legally have a duty of interest to their clients, whereas banks, they don't have that, which means their only duty is to themselves. Bank employees can only sell their bank's products, so they're going to sell you and push you towards the product and loan that the bank wants you to go with.
I'm sold. Then again, you are preaching to the converted. Now, I mentioned earlier about that lunch I had and the dinner I had,
Oh,
and
yes.
with both of those individuals, we actually discussed the broker market share record. So the first person, this well-known industry figure I had lunch with, he predicted the broker market share would peak at about 80% because he thinks brokers will become a victim of their own success. So his argument, Owen, was twofold. First, people from a banking and finance background tend to succeed as brokers, while people from different backgrounds often fail, and that the higher broker market share rises, the more likely the industry is to attract people from those other less successful backgrounds. And second, if the quality of the average broker declines, the industry's reputation will decline and people will go with the devil they know, i.e., their bank. What do you think of that argument?
Well, I understand what they're talking about, but it's you could argue that the opposite happened when the broker industry first started taking off, where you had when there wasn't the regulation of minimum education requirements. You would jump into a taxi, and the taxi driver was suddenly a mortgage broker as well, asking you if he could refinance your loan. And yeah, we've had the similar things happen with other industries like buyers agents, and in the last half dozen years or so. So it's but I don't disagree in terms of maybe the maxing out that somewhere around maybe in the 80s. It might get to 85 percent. And but I don't think it will go past 90%, because there still is a requirement for a number of people to be able to deal directly with a bank, whether it's for commercial purposes and so on. And those figures are for residential loans, aren't they, Nick?
Mm,
Yeah, so I think there'll be a growing market, and I know that there's a growing market within the commercial lending space for mortgage brokers. So it'll be as the residential side matures more, there will be It'll be more difficult for new brokers to break into the residential space, which will start to restrict growth.
I think brokers write about 1/3 of commercial loans. So there is significant room for growth in the commercial side of things.
Yes, and that's probably grown from less than 10% in the
Hmm.
last probably 5 years ago.
Okay, so that first person I met said that broker market share would peak at about 80%. Now, the other person I met, he was worried that broker market share would fall to about 40% in a few years, and he had a different reason. So he said banks would start offering digital loans with ultra-fast approval and special pricing, not available to brokers. So it would become cheaper and faster to use a bank. What do you think of that argument?
Yeah, yeah, that's a possibility as well. Whether it go to 40% though, I doubt. That might shave off and maybe another 10%. There are very few people that have because those digital loan processes, even though they will improve, especially with AI technology, coming into the mix to help process these loans. They're at the moment those online digital loans, they're quite tight, and they're what people would call a vanilla loan
Hmm.
in the industry, where they have to fit into a very tight square box to be able to make sure they go all the way through. Now, yes, as technology improves, especially with AI, as I just mentioned, that box should increase in size and to make it easier down the track. But I think a lot of people, especially first home buyers who are doing it for the first time, they will seek the aid of a professional to get that advice. And then for investors who might have more complicated structures, they
Hmm.
definitely need the require the aid of a professional to structure their loans.
Well, I know we both hope the broker share keeps rising, and if that prediction of yours of 85% and then up towards 90% comes true, I think we'll both be very happy.
Yes, very much
Let's
so.
move on to the second story. Unemployment heads north. The unemployment rate rose from 4.3% in August to 4.5% in September, the highest rate in 4 years. While the number of people in work is increasing, it's not rising fast enough to keep up with the number of people entering the workforce. That's why over the past year, the number of employed people has risen 1.3%, but the number of unemployed people has jumped 12.6%. BetaShares chief economist David Bassanese said, "The labour market is no longer proving able to find jobs for all that want them." Bassanese also said the 4.5% unemployment rate is in line with the Reserve Bank's base case view of full employment in Australia. So the RBA can no longer characterise the labour market as tight. Owen, the unemployment rate has been steadily trending higher over the past 10 months. Do you expect it to keep rising?
Well, it's a possibility. Uh, as what you said in the article there, as you read it, that the participation rate is the numbers that are participating are increasing, but there's not enough jobs to fill all those people. So it's even though unemployment rate increasing is usually a negative thing, when you look into the actual stats, we've got more people employed. Yes, we're not employing as many people as want to be employed, so that's a problem. But it's almost like we've got a good problem to have at
Hmm.
the moment because there's more people becoming employed.
I had a look at the ASX rate tracker, which has a look at market expectations regarding the next RBA rate decision, which is on November 4. And as of October 15, the market was saying there was a 56% chance the RBA would hold rates on November 4 and a 44% chance it would cut rates on November 4. Now, given that unemployment has been rising, should the RBA be cutting rates on November 4?
Well, it's I think the RBA nowadays looks a little deeper into things, and what we were just talking about with the number of people becoming employed is increasing. Then it's not like people are losing jobs, and which is getting added to the unemployment rate. So, in this case, I think I'm calling it that the RBA is going to hold.
Okay, well, we've spoken about unemployment trending up. The economy grew only 1.8% last financial year, which is very low. What can the federal government do to make it easier for people to start businesses and employ workers?
Cool. That's a big question, Nick.
Mm,
There's lots of things the government could do. It's and we need to keep our small businesses. Our small businesses, if all of the small businesses in the country was one business, then it would be the biggest employer. And so make it easier for small business to keep their employees. There's things that maybe they could work with the states on payroll tax to do something there. But of course, that would mean we'd need tax reform, and yes, politicians on all sides in all jurisdictions. They seem to be allergic to tax reform these days, so I don't think that's going to happen. But there's a lot of small businesses that are being that are going out of business simply because the business owner is retiring. And I think as the baby boomers that are the biggest holders of small business at the moment are retiring, we need people to hand them over to buy them. So I think it would be good if we had some kind of, just like there's these government funded, government backed or government guaranteed first home buyer loans now, where you can get a 5% deposit. How about some government guaranteed small business loans?
Okay, that's
And
interesting.
yes, it's now, of course, they'd have to be specific for a specific purpose, and some tight guidelines on them. But it's not just to be able to, you know, encourage investment for small businesses in asset purchases, as a lot of federal government budgets have done over the last decade or two. But it's purely to be able to help fund the purchase of a small business, and so that small businesses can carry on. Rather than getting gobbled up by large multinationals that tend to be overseas companies. So it's yes, we need these small businesses, especially in regional areas and in outer suburbs, to be able to employ local people where they are. So yes, let's start this drive for let's buy a local small business.
So government-backed loans to help people start paperclip factories. I like your thinking.
No, not start a paperclip factory, but to buy an existing paperclip factory that is employing people right now.
Yep.
And the current business owner is looking to retire.
Okay. Buy existing paperclip factories and be very careful about what AI you implement in the factory as a condition of the loan. Okay.
Yes, very much so. But it's, again, not restricted to paperclips, can be any small business that is employing people.
Well, for our final story, we're really going to tap into your expertise here because this one is about the rental market. Of course, your business, Leifield, property management business that operates in 5 states. I'm looking forward to your thoughts. Our final story, Owen, is rental market strongly favouring landlords. SQM research has reported that Australia recorded a vacancy rate of 1.2% in September, the same as the month before and the year before. However, the number of empty rental properties actually declined over the past year from 37,932 to 36,046, despite the fact our population has increased in that time. Drilling down into the individual cities, the vacancy rates in September were 1.8% in Melbourne, 1.6% in Canberra, 1.3% in Sydney, 0.9% in Brisbane, 0.8% in Adelaide, 0.7% in Perth and Darwin, and 0.4% in Hobart. SQM Managing Director Louis Christopher said the rental market remained very tight, with little sign of meaningful supply increases. Sydney and Brisbane continue to see strong tenant demand, while Hobart remains at near record low vacancy levels. Rents are still rising in most capitals, particularly for houses, despite a slight easing in rental growth rates compared to last year. Overall, we are still seeing an undersupplied rental market, although conditions appear to be stabilising in some cities such as Melbourne and Canberra. Owen, why are vacancy rates still so low in all the capital cities?
Demand, 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 and not enough supply, Nick. Yes. Have we talked about this before? I wonder. So, yes, even though, as I've mentioned in the past, we have seen that the demand start to improve because of increase in supply. And so we're not at, ridiculous, 100 people lined up at open homes, although I'm sure it still happens in some areas. But where that was the norm a few years ago in a lot of areas, it's not happening as much these days. So there's still good demand, which means it is on the side of the landlord. But we're not seeing the increase in rents as dramatically as we were. So we are seeing that we're starting to hit more of a ceiling in a lot of areas. So that being said, there are a lot of areas in these capital cities where there is high vacancy, and yeah.
Well, let me follow up on that. So Sydney's vacancy rate is only 1.3%. But is your property management business, Leifield, finding that rental demand can vary significantly from one part of Sydney to the other?
Oh, definitely can. Definitely can. Sydney, though, is fairly even across the board, as well as Brisbane, which has got very low vacancy rate. It's fairly even across the board. But Melbourne, which was the highest vacancy rate on average, it's in some areas there's very little vacancy, but in others there's very high vacancies. So you could be looking at sort of 3% plus in some areas, which is probably pushing that average up to where it is at that 1.8. So that's where Melbourne, it's very spread out, and there's a lot of new build areas and with very high vacancy rates, and rents are dropping as a result to be able to compete. And so yes, especially in cities like Melbourne, you need to be careful of where you're looking to buy, and make sure you have a look at how many properties are on the market in that suburb that are comparable to the one you're looking at buying.
You mentioned a lot of new builds in Melbourne. Is that why Melbourne has the highest vacancy rate of all the capital cities?
I would say that is probably the main contributor. So Melbourne's doing a good job at building more properties. But when you're having a lot of properties coming on the market in one area, then that can cause a lot of problems with for the investor, for the property owner, to be able to find a tenant quickly and at the price that you were probably expecting. To give you an example, as the general rule that we use in Leifield when looking at supply and demand and pricing, when we're pricing a property for lease, if you had a 4-bedroom house that you're looking to rent out, then we would go to the suburb, and you could go to either realestate.com or Domain. Either would do. Again, depending on the state and the market, but let's use real estate. And you would put the suburb in. You would restrict the search to just that suburb. You would put in all 4-bedroom houses, and you would have a look at how many properties are on the market at the moment that are 4-bedroom houses. Now, if there are more than 20 properties on the market that fit that criteria in that suburb, then we would call that an oversupplied suburb, an oversupplied market. If there were less than 10, then that would be a good market for the investor. So, and if there were less than 5, then that would be a great market. So that's what we need to look at. That's probably the easiest way of working out whether there's it's an oversupplied market or an undersupplied. And so ideally, you want to be looking at under 10 properties that are comparable in that area. To give you an example of one area in Melbourne that we were trying to lease at one point earlier this year, it had, using that same criteria of looking at, say, the 4-bedroom house in that suburb that was for lease, there were over 100 properties on the market. So that was 5 times an oversupplied market. So yes, there were big problems trying to get a property leased in that suburb at that time. So yes, be very careful. And it was all due to brand new builds all coming onto the market all at once. So give it 12 months, then that issue will go away. But it's just a painful time for the investor in those first 12 months.
We have covered a lot of ground today. Home loans, unemployment, vacancy rates. Thank you as always, Owen, for sharing your expertise.
Thank you, Nick. And as always, you always bring the news each week, and it was a great news session this week. So thank you again. And we will see you next time.